Welcome back to Business of Drinks. I'm Erica Ducey.
And I'm Caroline Lamb. Today, we are talking about what it really takes to scale an agricultural business into a national beverage platform. And what happens when you decide you don't just want to be in cider, but you want to lead it.
That's right. Our guest today is Andrew Blake, founder and CEO of Blake's Beverage Company. What started as a 1,500-acre family apple orchard in Michigan, founded in 1946, has evolved into the second largest cider company in the U.S., selling more than 2 million cases a year.
And that growth did not start very polished with a CPG playbook. It started with a barn renovation on the family farm, a tasting room, and labels that Andrew had designed himself. 6 months in, a big Midwest distributor came and knocked at the door, and suddenly he had to figure out how to move from local agritainment to regional distribution.
Today, Blake's Beverage Company operates 4 production facilities in Michigan, New York, Texas, and Oregon, strategically located in apple-growing regions to de-risk the supply chain volatility. The company manages roughly 200 distributors across 44 states and oversees nearly 200 beverage-focused employees within a broader 1,100-person enterprise.
We get into what that scaling journey really looked like, including losing money when entering distribution, hand-sticking UPC codes on thousands of cans to close a chain deal early on, and learning that growth almost always takes twice as long and twice as much capital as you think it will.
Yeah, and Andrew also breaks down how Blake's thinks about velocity and points of distribution, why liquid-to-lip sampling and trade spend matter more at scale than brand aesthetics alone, and how the company co-authors aggressive annual business plans with their distributors to earn mind share there.
On the product side, we talk about their 2 hero SKUs, Triple Jam and American Apple, and how flavor-forward profiles are resonating with younger drinkers who are drinking less volume but seeking more impact. Andrew makes the case that cider, which still accounts for under 3% of beer share in the US, has room to double over time.
We also explore their roll-up strategy, bringing Austin East Ciders and Avid Cider into the platform to accelerate national reach, and why Andrew cautions founders to cut synergy projections in half before signing a deal.
Plus, we dig into Blake's expansion into wine-based RTDs with Giddy Up for the convenience channel and their approach to non-alcoholic cider, which Andrew sees as a long-term bet.
So if you're a founder thinking about distribution, capital stack strategy, M&A, supply chain risk in agriculture, or how to earn distributor trust at scale, this episode is packed with brass tacks insights.
If you're watching cider as a category, Andrew offers a clear thesis: more share at retail, a widening price spectrum, and a bifurcation between premium wine-like cider and accessible value plays.
So here's our conversation with Andrew Blake of Blake's Beverage Company. And now, a word from our sponsor. If you're building a beverage brand in the US, you already know logistics, compliance, accounting, and distribution management can eat up your entire week. That's where MHW comes in. They're a licensed importer, distributor, and full back-office partner across all 50 states. They handle the minutia so you can focus on building your brand. Whether you're launching your first product or scaling fast, they make the complex simple. Learn more at mhwltd.com. And now, back to the show.
Andrew, welcome to the Business of Drinks.
Thank you so much for having me.
We are excited to have you come share the current events in cider in the U.S.
So thank you for having me on. Excited to talk about it.
Awesome. For the listeners who are not very familiar with Blake's, can you walk us through the brand's history and its key attributes and values?
Yeah, so Blake started as a traditional apple orchard in 1946. My grandma and grandpa started it when he got back from the war. Proceeded to have 13 kids, try to make it in farming. We had to evolve in a bunch of other things. And fast forward to today, Blake's is 1,500-acre apple orchard. We have 4 agritainment locations and a hard cider company that came out of it.
Yeah. So coming from a farming family, what problem were you specifically trying to solve when you decided to start making cider?
Yeah. So The family business has been a great business to be a part of. We've evolved into a lot of things, but it's always so seasonal. So we had revenue for 3 months of the year, a lot of times during harvest season. And as the business scaled, I watched my family really kind of struggle with the ebbs and flows of very seasonal revenue. So I went away to Michigan State, really wanted to come back to the family business to solve that. I had a bunch of bad ideas. None of them are bad because they led to the good idea. But a bunch of ideas in college to try to solve that. They didn't work out. That was right when craft beer was getting big. I graduated from Michigan State in 2011. All that there was this trend in craft movement. We had a juice and cider business that was relatively local, didn't have shelf life, couldn't really expand or evolve outside of the Michigan area. But I saw this opportunity with hard cider. One, it was growing. It's kind of American heritage drink. There was no real innovative players in the space at the time, although Boston beer was just coming on the scene with Angry Orchard. So it was finally getting its moment in the light. So I thought it'd be a good opportunity. I had reached out to my dad and uncle, or the owners of the family business, and asked if they wanted to invest in this great idea. They kind of thought I was crazy, over a period of time. And I worked and developed recipes and products and put a business plan together, and ultimately got them to invest in what became Blake's Hard Cider Company. And that was in 2012.
Okay. So over a decade in, what did the earliest version of that cider business look like after you got the buy-in from your family?
Yeah, so we renovated a barn on our family farm, turned it into a tasting room, and I really made the pitch really just from a tasting room concept. We had 4 locations. I thought it could be a good kind of driver in the local pub style at our 4 locations, and we had really crappy labels that I designed myself. But it's not like this super overly engineered beginner story. It was very organic. It was really just about, we made a great product. So I always tested on that. 3 generations of apple growers. We've been making cider for a long time. Cider is a complex drink. It doesn't get enough credit for that. It's made a lot like wine. So there's complexity in what apples you use, how you ferment them, what yeast you use. So the one thing we did right was we made a really, really great best-in-class product. And it was really just to serve the customers visiting the farm and hopefully attract new customers. And it's better to be lucky than good, because that was really the only business thesis I ever put together. But about 6 months after we launched, I actually walked into my office one day and I had a bunch of cards in my door from a large distribution group in the Midwest who wanted us to scale up our product and get into distribution. And that was my first thought of distributing. I knew nothing about it. Took the meeting, brought my dad and uncle along because I knew I'd need some help, financing that part of, the journey. And they convinced us that there was a huge opportunity and gap in the market. And we set off to build, our first production facility. Our original production facility was 5,000 square feet. And, after that meeting, we moved into a, 25,000 square foot production facility. Really, for me, it was about really perfecting how we made the product, get the branding right. I knew when we first launched, it wasn't ready for prime time. When I look back at the labels, it's just funny to see how things have evolved and how the branding and the voice of the brand is coming into its own. But one of the things that I always say as an entrepreneur is just start. So much of what I've seen in business and in my own experience is people focus too much on getting it absolutely perfect before they launch. And for me, it's always a learning and iterative process. And I'm always trying to be smarter, today than I was yesterday. So the biggest thing for me was just starting and then let the journey unfold and look at the opportunities that present themselves. We always wanted to, grow that business, but I didn't know exactly how that would take shape. And as you get on the way appears a little bit. And it was really apparent that there was an opportunity and, we took advantage of it.
You were able to tap into the legacy of your family for the funding in the early days. Were there any trade-offs that forced for you?
Understanding your capital stack and your financing and how you really want to scale a business was something that I only, as the journey evolved, got smart on. I would say that it put a lot of pressure because you're dealing with friends and family dollars, and you want to be successful with that, and you want to return that. It's attached capital, if you will. And so there's a little bit more emotion that goes into the highs and lows of business, and there's always highs and there's always lows at any scale, and it's just like different chapters of all that. I think that's the trade-off in the early days, but no bank, or at least the way I got into it, no bank or intelligent financier probably would have supported me in my early days. But as we started getting some success, we got a lot of smart people around us, and we really started looking at how we'd actually finance the business at scale. started talking with banks, started putting together actual real business plans and strategies. And then we came in really heavy with some really good banks that helped us expand our plant and equipment. Today we have 3 plants in the country. We are the largest production cider platform in the country. We have a production facility in upstate New York, one at home base here in Armada, Michigan, and one in Bend, Oregon. We really position those in the apple growing regions of the country. So we had some insight on how we wanted to build that national supply chain. And, as we got into those talks, we started bringing in, the right kind of capital or banking partners to help us support our mission.
So, looking back before the national expansion, what would you tell founders who about capital in this category? What do you think that people sort of underestimate when you said a bank wouldn't give me money then? How do you get started out then?
Yeah, so I think a lot of times it's you have to rely on that network. So networking is a huge part. I come from a really big family. My dad's from a family of 13. We're all entrepreneurial in spirit. So I was very fortunate to have a close group that wanted to support an idea and help coach the next generation. So I'd say, building that network, whether it's family or through your social networks, but really building a group of people who are like-minded that want to help support you. And I've found that the interesting thing about the entrepreneurial world is like, if you're looking for help, that people are often like people don't ask enough, but if you ask, people will. And it might always be in the form of capital, but it would be in like, ideas on how to structure that, or, ideas, things you have to do to actually go get outside and friends and family capital. So I would say that early days, though, short of you having those like deep connections and financial opportunities, it is going to be friends and family. And I would say knowing that it's, frankly, it's a gift and a blessing, and that you have to be a steward of that and make sure that you find a return at some point. The hard part is when you're doing it at that stage, you don't know, you can't honestly say when they'll ever get it back. So they're definitely taking a bet on you. And I would just say be upfront about that. So there's no odd dynamics that happen later on. I have a very patient family. It was only a decade later that I was able to return some of the original investment from the people who bet on me and bet on us. So it was a longer journey. At that time, I probably thought it'd be 3 years or 5 years. And like the adage goes, it takes twice as long and twice as much money to do anything you ever want to.
Yeah,
So
it's important to remember though. Looking back at when that first distributor came and was knocking at your door, like I said, how did that end up changing the trajectory, and how did that go? Was that really the ticket? It was the one and done?
yeah, so I mean, we sat down. I said, "Well, here are the products we have. We have these 750 like wine bottles built for like on premise at our tasting rooms, but won't scale at retail. We have draft." So we had to really cut down and take what was really great about the products we had and commercialize them. And we were very helpful because they had a lot of thoughts of what would work in the market. We're good at listening, and that's something that I always thought is a strength of ours. Is so we really listened to those partners. And then early on, as we got that right and listened and kind of heard what the products needed to be, I got on the road in Tommy Boyd for 4 to 5 years, living out of my truck, sampling throughout the Midwest, and hitting every meeting, every chain meeting that I could. That was a different time than it is today. It was very relationship driven at that point. You could really make connections. You could befriend people, from the retail side that could give you insight. And we got, like I said, better to be lucky than good. I think the product spoke for itself, and the story was compelling. But we had a lot of people who took a leap of faith on the brand and frankly the category. And it paid off, and we were able to deliver. So when we had the opportunities, I would say the thing that was always unique about our journey and why we're the second largest cider company today is we've always been able to deliver on the opportunities that presented themselves. We've obviously had a lot of stumbling blocks, and any company does as they grow and scale, but we've been able to deliver on the opportunities that present themselves, and that's been huge.
Yeah, tell us about what's a stumbling block that you've experienced.
Yeah. So, the just a funny story. This might not answer your question directly, but it's one that, like, in hindsight's like I'm very fond of because we survived it. But so I go to our first chain meeting. It's a large retailer in the Midwest, the largest retailer in the Midwest, so people can make a guess who it was. Talked with the buyer. Everything was in bombers, and I had a sell sheet of product in can, and I hadn't bought the canning line yet. I had new UPCs made, had a sell sheet for cans, and I go in for the fall meeting. Okay, we'll take it in all of our stores in the Midwest. You have to be able to deliver on this date. So I get out of the meeting and I call my dad. I'm like, "Hey, we got to buy that canning line we were talking about, and we're doing it." So anyways, we get into getting in production for that initial sale in the spring. As the product's going out the door, I realized that the UPC was wrong from what was in the retailer system, which is CPG 101. Don't do that. And so we have all these cans, blank cans with the wrong UPCs on them going out the door. So we paused production. I called a sticker vendor that day, had them make the right UPC, and we hand stickered every new UPC over the old UPC.
And now, a word from our sponsor. Today, that's us, Business of Drinks. Whether you're preparing to raise capital or enter new markets, the cost of bad decisions gets very real very fast.
Business of Drinks Advisory Services helps brands pressure test their strategy, sharpen their positioning, and get ready for that next phase of growth.
We work with drinks founders and leaders on distribution planning, portfolio focus, brand assessment, and investor materials.
If you want experienced eyes on your business before you make your next big move, reach out. We're at info@businessofdrinks.com. And now, back to the show.
Every product that went out, that's just how you have to, that's how you have to solve things. I mean, I look at today how sophisticated, our companies become, the talent that's around us, the checks and balances we have in place, the processes we have in place. But when you're a bootstrapping entrepreneur, you're firefighting, you're making mistakes, you're moving really fast, and all that stuff's going to happen. And you just have to be able to, be a problem solver in the moment, roll with the punches. And we've always been really, really good at that. I think that comes from our background as being farmers and being self-reliant in some way. But yeah, I'm very fond of that story because it worked out well. At the time, I thought my family was going to kill me. Wasted like $50,000 of just, raw materials that were just wrong. But yeah, those are the things you look back at and laugh and have some reverence for.
Yeah, absolutely. So, where is the brand now in terms of production and sales? And how does that compare to, say, your first run?
Yeah, so way different now. We have, like I said earlier, we have 3 production plants. We produce in those plants 5 days a week, 7 days a week in busy season, which our busy season is obviously the fall still. Although cider's becoming kind of a year-round drink and it's starting to get a lot more view at retail. Blake's Beverage Company is today the unequivocal second largest cider company in the country, only behind Boston Beer's Angry Orchard. I have to give credit to them. They've really built the category and kept it alive while people like us were developing. And they really created lanes for us to really have an opportunity. So I'm always really grateful for that. And last year we sold, just over 2 million cases, which is great. We have 3 brands actually tucked in under the platform. Blake's Hard Cider's the largest and fastest growing. And then we have Austin E Ciders based in Texas. And then we have Avid Cider Company, which is a Pacific Northwest regional brand. So all those brands are doing well. They've all have their own voice. They all speak to a different consumer within the cider category. And we really look at how we differentiate those kind of nationally. But yeah, it's going really well. Our 2 hero SKUs are American Apple and Triple Jam, both in the Blake's portfolio. Austin's Original Dry, which is a drier, a little bit more of a value option on the Austin side. And then, Avid makes just really, really good complex ciders in the Pac Northwest.
Yeah, absolutely. So, from what I know of Blake's, you don't shy away from doing fun, experimental, new cannings. So, what helps you decide this is working or we need to kill this?
Yeah. So, if you asked me that 5 years ago, I would have had a pretty esoteric answer and I wouldn't have known. What's happened over time is as you build a brand, while innovation is super important, you can really choke out operations through too many SKUs and just the complexity that you build into your system. So we've had to be really thoughtful of that as we've evolved. So we've gotten a lot better at how we look at success within our portfolio. Probably velocity at retail is the number one metric we use on a SKU basis. And so we pay a lot of attention to rate of sale at retail. Yeah, I think it's pretty cookie cutter for those that are, experienced in beverage, but points of distribution and velocity are the 2 you really look at. Is the product attractive enough, or is it speaking to the customer enough to get the placements? And then are the customers resonating with it to get off the shelf at retail? And you look at that velocity metric. So we have a pretty in-depth process now. It's interesting with some of the technology that's coming out and, AI and some of these things that are able to analyze large data sets. You're able to get a much more intelligent view, much more granular view, much more easy than it ever was before to really look at your portfolio and what's working and what's not. So, yeah.
Looking at Blake as the flagship, and it sounds like Blake's is still the volume driver. Which SKU? Is it Triple Jam? I mean, that's the one that my friends who are big fans, they're going for. Is that the one that really opened doors and created the repeat buying to start, or was it a different one?
Yeah. So that was our original one. I think it's in the 7th year and it's still seeing double-digit growth. And the brand that just keeps surprising. I keep thinking that it's going to hit its ceiling at some level, and it never does. I think that's also a huge opportunity in the category. When you look at cider in the U.S. compared to other Western, cider markets, whether it be Australia, Spain, England, Ireland. Cider is about 7 to 8% of beer in those markets. In the US, it's still under 3.
Oh.
So yeah, so I think those of us who are optimists in the cider world and believe category, you'll really think that there's a home, probably around the 6% of beer share for cider. So that's a doubling of our current share today. So there's some really good opportunities we think that are not only for our own brands to continue to win, but for the category to continue to expand. And we're starting to see that at retail as some of the long tail of RTDs and lemonades and some of these things that you don't see in some of the other markets flow through. And then obviously the challenges beer has presented a lot of opportunities for us. And the unique thing about cider too, is everyone's trying to figure out this new generation of drinker, the Gen Z and late millennials. And I would say that what I can see, and I'm half hillbilly, so take it for what it's worth. It seems like they're drinking on flavor, like very specifically. The occasions are different. So when they want to drink something, they want to taste it. It needs to be full bodied. And I'd say cider really presents like a kind of a health haloed version of that type of product. And so, we think what we do uniquely speaks to that next generation of drinker. I think it's why we're seeing the success we're seeing too. I think cider's a natural fit for where that new drinker is at today.
Yeah, for the record, that's not a hillbilly take. That is exactly what the data tells us. Flavor is, if not the main driver. So with that in mind, I am curious to hear for your top 1 or 2 SKUs where volume's really concentrated. Can you explain the flavor of those ciders or what the concept is?
Yeah. So Triple Jam is a full-bodied, probably the most flavorful cider in the US. It's a triple berry cider, all berries inspired from the farm that we grow here. And that's the thing about our platform. We're fruit growers first and foremost, and we really honed in our production operations around being able to work with fruit. So we feel like we're the best in the business at working with real fruit and understanding those flavor dynamics. So Triple Jam is just has a great balance of acidity to sugar. It's got really natural berry notes in it, and just drinks super easy and is super approachable. So that's really continued to grow and find favor with more and more customers. We've kind of expanded our reach. And then American Apple, it's our fastest growing product in our portfolio. It's our imperial cider. I'd say if people are drinking for flavor, they're also drinking for coldness. And so, while people might not be drinking in the quantity as much, I think people want to have maybe where they used to have 4 or 5 drinks, they're now having 2 or 3, and they don't want the volume of liquid quite as much, but they want the impact. So you're seeing stuff that's higher on the ABV scale resonate with drinkers, and American Apple really hits that. It's a really just direct, great apple-based product that has a little bit of a drier component, a little more acidic. So I'd say it's a little bit more of a sophisticated drink than the flavored stuff. For the cider aficionados and purists, it's a really great product.
Yeah, and how many cases about of each of those are you producing?
This year.
And now a word from our sponsor. If you're building a drinks brand right now, you've probably realized something uncomfortable. There is no playbook anymore. Looking good isn't enough, a clever tagline won't save you, and copying what worked 5 years ago, that won't move the needle. That's exactly why Nihilo Agency created the 2026 New Rules Report. It breaks down how the most effective beverage brands are actually building today, across alcohol, non-alc, and everything in between. If you want clarity on how brand really drives growth right now, go to newrulesbev.com/report to download your copy. And now back to the show.
We'll probably do 350,000 cases of Triple Jam and probably 300,000 of American Apple.
Wow.
Yeah.
And you said American Apple's growing fastest. So
Yeah, it'll overtake Triple Jam from a run rate perspective. It'll probably overtake Triple Jam in the fourth quarter this year after fall sets. I think it also that product really actually speaks to a channel that we haven't been able to infiltrate yet from a cider perspective, which is the convenience channel. I mean, we've done almost zero of our business today in convenience. Obviously, convenience is where all the growth is happening in the category and categories across Bevel. So American Apple's finally, we've built that product to be able to really sit in convenience at the right price point. So we're taking an aggressive stance at that this year. And so that's going to open up a whole new world for us, finally being able to go attack that channel in the right way.
That's great. So, as you've scaled, has your marketing mix changed? And what do you think matters more now? Is it brand building, trade spend, field marketing, or social and partnerships?
Yeah, so marketing's always one of those really esoteric. I always used to fancy myself a marketer, and as you learn more, the more you realize you just never knew about marketing, and it's becoming a science easier and easier, but there's always been an art to it. So the art that I thought we always got right was I think we created really attractive packaging, and we had a really great brand voice across all of our brands, and we were always really good at that. We're always good with the flavor and innovation. So like that to me is the most important thing that you can develop early on and get right. And we spent a lot of money on that early on. Now that we're at scale, you have to kind of flip the script as you kind of have your customer understood, you have yourself understood as a brand, what your values are, what you communicate, who your customer is, and you need to always be true to that, and you need to revisit that often too, because that evolves in its own, organic way over time too. So you got to leave space for that. I think that's really important. People miss that the organic evolution of how brands speak to customers and kind of, evolve. But I would say, if that was where we kind of spent a lot of our time early on, today it's much more, kind of focused on trade, sampling, activations, liquid to lips, exposure, and really trying to create like some ROI metrics around those and kind of see how we can inflect velocity, kind of at retail, on premise, in different ways. We probably went from a more artistic marketing department to one that's a little bit blended art and science. And we're leaning more into, as we spend more money in marketing, really trying to attach thoughtful return on investments to the spends we do there. Where I'd say early on, it was put all the money in the funnel and hope you like the outcome at the end of the year. But I think that's pretty normal.
Yeah. So you're saying trade spend now is probably more important as you have expanded distribution. So how is Blake's distributed and what does the channel mix look like today?
So Blake's is distributed in 44 states today, across the portfolio, made up of about 200 distributors. So we have a large distribution network that we manage. If I were to do it over again, there's definitely challenges that come with the model we chose for distribution, but there's pros and cons with all of that. And, we've had great distribution partners.
Did that have to do with, you being a family run business, you're looking to work with more independents, or that's not really the reason?
No, it was kind of like we looked at every state. We were like, what is the network? So when you go in alcohol distribution, you can find statewide distributors, one-stop shops. You can find networks made up of 10 in a state that can go deeper in those markets. And we always said that if we're going to be the number 2 or eventual number 1 cider company in the country, we needed to really have, which we will get there, with a little luck, and we continue to do the stuff we're doing, we'll get to number 1. But we have to be able to go deep in every market. So we chose a more complex by state distribution strategy than ease of management. So as we've scaled, that just created more and more complexity as you have more SKUs across more states. So you definitely have to plan for that complexity, but it was a conscious choice.
Totally. So at your distributors, how are you getting the distributor salespeople to care about your brand? I mean, there is a huge, what's the word I'm looking for? There are a lot of brands out there right now. So what incentives are you working with, or what has really driven results?
Yeah. So, we try to really incentivize our sales team and to the degree we can influence distributor sales team to really, we've gotten aggressive with aligning our kind of goals. One of the things we've invested a lot in is our annual business planning. We really make it a collaborative effort with distributors. But today, I would say we have the benefit of, we're usually a top 5 supplier in a lot of our distributors. And we're in this bespoke and niche category, but the volume and the margin cider brings to distributors is very important. So the economics work in our favor to garner attention. And so that's always helped. But we put really aggressive goals that we co-author with our distributors of what we think is opportunities in market. And then we've back that with financial investments, assuming we can hit those goals. So in market. So we've just been really honest and good about doing what we say we're going to do. Our say to do ratio is high with distributors. I think that's built a lot of confidence, and that's important, right? When you're talking sales, you can overpromise and under deliver, and you learn quickly that like if you deliver on what you say you're going to do, and are able to do what you say, you get more and more, mind share, because distributors do have so much to manage and there's so many SKUs. They need to spend their time with people they can trust and value their time and understand what they have going on. So I think our team's been really good at that. We have an amazing sales team, amazing executive team, amazing organization at all. But our sales team's really distributor friendly and distributor first in a lot of ways.
Yeah, that goes a long way in my experience. Last thing about the three-tier system, is there something that independent producers tend to misunderstand about scaling through it? So you came to this from you didn't have a background in beverage alcohol, you had a background in agriculture.
Yeah. I think it's important to not have any misconceptions about what you're getting into when you're getting into distribution. It's a game of scale. People get afraid of the margin impact and the cost of distribution. But that's really price of admission in this game, I think, as much as that's hard at times to wrap your arms around. And when we went from selling in our brew pubs to distribution, we lost more money than we made. A bunch of money the first years when we were solely just managing ourselves. As we went into distribution and scaled, we lost money. And so I say that to say there's an upfront investment that you have to be willing to play the long game, and you have to be capitalized to play that game. You have to understand that there's a cost to getting there, and that the other side of that and the success that comes of that is when you get to scale, and you're really able to sweat your assets from a production standpoint, maximize your revenue per employee. And that's a journey that you have to map out. And I think early young entrepreneurs, and I know I for sure did, definitely underestimate that journey and that time horizon to the other side, because you're definitely investing and spending to get into distribution, to be recognized, to have share of mind, and you're putting a huge upfront investment. And you gotta believe in the product, and you gotta have the staying power and willpower financially and mentally to see it through.
So how many employees are working for the company and in what capacities?
Yeah, so the total Blake's universe, we have about 1,100 employees across all companies. In the beverage company specifically, we're just under 200 employees. Obviously, have a great executive team around me, a chief commercial officer, a really great COO, runs all of our production, logistics, and supply chain. Really talented CFO, really great chief people officer. Yeah, I would say that that's an investment that I only recently. I didn't HR is in your people investment. It's something people talk a lot about a lot. I think in the age of AI and people trying to find margin and optimize, I think some of the real people dynamics can get lost. And I would say one of the investments we made 3 years ago was really invest in people, and our chief people officer that we have today. And that's really about just making sure there's alignment of what the company's goals are to what the department's goals are, to making sure we have the right people on the bus doing the right things as we're evolving as a company, even if we are becoming more automated, if we're becoming next generation beverage company, whatever that means, right? Because the paradigm's definitely shifted, essentially post COVID, of how a beverage company can be successful. In my view, it's best to do that transparently, make sure everyone knows where we're going. And then the investment we make in our people is make sure that we're clear about that, and that the team has opportunities to adapt and evolve with, the direction the company's going.
Yeah. In any fast growing business, there can be strain on the employees. Have you had good retention with the team that you have as you've grown? And can you speak to that a little bit?
Yeah. I mean, we rolled up couple other companies, as I mentioned earlier. Austin East Ciders came into the platform, Avid, those are, separate companies with separate cultures. So having to integrate that, there's definitely learnings there. And we've had our bumps in the road for sure, as all companies do. It's just normal. And these companies go through these exponential jumps in how the business operates. As you get smarter about your growth and you get smarter about where your people are at, where the company's going, as you scale, you can get better at planning those next leaps, and you can do them more gracefully. Whereas like in the early stages, you're surprised by your own success and things break. You basically grow and you break systems, and you hopefully don't break your people, but your processes definitely break, and people struggle with that. So to the degree that you can be insightful and thinking ahead about where the company's going, where the real breaking points are as the business scales, you can create a better environment for your people. And, I only wish I learned that early, because it definitely took years of cutting your ceiling, going to your capacity. And even mine as like a CEO, right? You have to evolve and grow as the business grows. If you're not willing to do that, you're probably not the right guy for the job or gal for the job. As an executive or founder, I would say that that's really important. You got to make sure you know what you're good at, make sure you know what you're not good at, surround yourself with people who are good at what you're not good at. But you have to be willing to evolve, because you start bringing on talent. The executive team I talked about, and our VPs and directors, they're all. I used to do every job, and at this point, every one of those people I mentioned are far more talented than I ever was in any one of those things. So, but just being able to know your strengths, your weaknesses, and allow really good talent to come in. And, I think that's a big thing, that the CEO and founder is why the business got started. It also can be the reason why it doesn't make it. And so you got to make sure you're being introspective about that.
Yeah, I agree with that. So you have talked about the merger a little bit. And it seems like the merger was positioned as a way to solve supply chain constraints and scale nationally while keeping these brands distinct. At a practical level, what problem did the merger actually solve for you that you couldn't really fix organically? And has that math changed since the deal closed?
Yeah. So probably the fundamental reason we decided to do this roll up strategy was, when I looked at it, the cost and potential dilution I and we were going to have to take as a company to scale nationally, but it was going to take too long and too much money. And there was still risk if you could do it. So calculus between rolling in these other two companies is they were in geographic regions that Blake's, the brand, wasn't strong in. We didn't have distribution. It had been 5 years to build up our distribution to where those brands were at in those states or in those regions. And so it was kind of quick access to national distribution, and you could hopefully make a smart, accretive investment in a company that now allows you real national reach. And when you just do the cost analysis of buying an asset with revenue, with really strong people, with a brand that connects with people in the region, to like growing your own, the capital you would have had to raise or to like find to go do that organically was just, it made a lot of sense. And I think, in hindsight, it was the right move. I definitely, would caution any entrepreneur who does that to understand what you're getting into when you're, merging cultures and companies. And I think that was a huge learning, one that we're really good at now. And as we look for more investments and, potential other tuck-ins in the platform, we're going to be a lot smarter about. But the calculus really made a lot of sense at the time. And for us, it was the right move.
Yeah. What would be your main warning for someone looking to do something similar?
You put on paper all the synergies and how great it's going to be. And so you should just take that piece of paper, put a big X through it, get a bunch of consultants. This is what the company's going to look like post an acquisition. And then you go to the old adage, it's going to take twice as long, it's going to cost twice as much. And basically take any numbers these really smart people give you and you cut them in half. And that's the reality of probably what it'll be. Now, I think I say that today jokingly, but if we did another one today, I would say I'd reduce those numbers by 25% because I think we've gotten better. But when you haven't come from that world, you don't understand that. That's a big watch out. So just be careful of the rosy picture you're painting for yourself, I guess.
Yeah, that's good advice. At this point, how sensitive is your business to a bad apple crop year? This is still an agricultural product. So, what levers do you use to protect yourself when you're relying on Mother Nature?
Yeah. So our whole thesis on our plant strategy and our supply chain strategy is we have our 3 plants in the regions they're in for reasons. They're close to the apples. So, we've really, de-risked our supply chain by doing that. And so that's been a huge thing. And if you were in, one region and your business was built on apples or juice at a certain price, in a certain region, any, weather event can really, change that. And early on, we saw that there was years where our cost of goods went up $2-3 a case just on a crop damage. So that's really what kind of led to that thesis. So we've de-risked it in that way. And then also, there's concentrates and flavorings and things like that can really smooth out some of that risk. So you take a bifurcated approach, make sure you have supply chain from different regions, different juice processors in different parts of the country. So we've just taken a pretty holistic risk mitigation strategy nationally, but that's really only able to be deployed because of the platform we put together. So, and we've definitely been playing the long game for this.
Yeah.
Those investments wouldn't have panned out if we were looking to return 2-3 years. But we have a goal of originally is to become the number 2 cider company. We've hit that. Now our goal is to be the number 1, and we got a lot of work to do, but we're on our way.
You're on the way. So You're a bit of a serial entrepreneur. You've built across agriculture, and we haven't really talked about your canning, manufacturing. So, right now, zooming out, are you still focused on building a cider company, or are you building something bigger, a bigger infrastructure?
Yeah, so I come from a entrepreneurial family. We have a lot of different, family-owned businesses, and it's in our nature to kind of be serial entrepreneurs. But the beverage company has been a great business for me to develop as an executive and as a true CEO, and so it's still my number one priority. Always will be as long as I'm the CEO of it, and that's my responsibility to our partners at distribution, our partners at retail, and our probably most importantly our employees and customers. So that is still where all of my focus is. But I am opportunistic, and there are opportunities out there as you learn more about this ecosystem. And so some of my other pursuits and other businesses that we've invested in or started up have actually been through the lens of problems or opportunities seen through the at the seat of the CEO of Blake's Beverage Company. So whether it was co-manufacturing plant that we saw an opportunity for, that kind of came out organically, or an AI company that we started, thinking that that's a thing that, this industry, which is very, brick and mortar heavy, there's a lot of capital that needs to go into scaling up these businesses, and this seeing that opportunity, some of those investments allowed us to turn some of that focus into Blake's to help make Blake's better, as well as being a good investment. So we thought about it that way.
Yeah, all inclusive approach. You've recently pushed into wine based RTD with Giddy Up. What did you see the market doing that made you feel like it was the right moment to move beyond cider?
Yeah, so we've always positioned for sure internally and just recently externally as a fruited beverage company. I mentioned that earlier. That's what we're good at, and we can really make anything best in class that comes from fruit. And so it's always been in our wheelhouse from a production standpoint. As you talked earlier, it's really about making sure you have the sales strategy, the marketing dollars, the buy-in from distributors, and all of that. So when we looked at our opportunities, we said, where are our big bets, and beyond cider or adjacent to cider. And C-store, as we talked about, was a really big one. We're getting traction with American Apple, but that was one that cider is just historically, because the price point for cider historically is higher. So it hasn't necessarily always been able to be, kind of consumed or approached or valued at a place where the C-store consumer wants it. And as you start seeing stuff with, Beatbox and some of these other wine-based RTDs that, they're obviously huge successes, we said there's no reason why we can't play in that. So under the Austin umbrella, which is our value cider brand nationally, it speaks a little bit more fun, a little more rough and rowdy, a little more cowboy, G. Giddy Up, product was built out of that. And feel like it's got huge success and huge opportunities in the C-store channel. And out of all the products we've launched off the gate, it's probably our most successful chain launched product. So, most points of distribution right off the gate. So I think our team was really great in spotting that opportunity. The sales and marketing team were great in delivering those results. And now the next thing is, will the velocity be there, and will it pull off the shelf? And we're pretty optimistic on early tells that it will.
Yeah, because this is brand new.
Yeah, it just rolled out in February.
Oh, wow. You've also moved into non-alcoholic, which we need to talk about a little bit. What role do you see NA playing in your portfolio? Is it just an incremental growth thing? Is it sort of defensive, or is this a long-term thing you think is going to stick around?
Yeah, so I think it's long term. The opportunity we saw is that the NA category is obviously growing. Cider's one of the only growing alcohol categories right now, so we're blessed and lucky to have that tailwind. And then obviously everyone pays attention to the industry, knows the NA category is growing. But when you look at the NA shelf, particularly at retail, there's not a lot of diversity of product in the cold box if you look at retail. So we think there's a real space for us to play in here, and something people are obviously looking for this product. And all those drinkers are different in what they like and what they're looking for. So you see it really predominated by NA beers, or majority of the category you see today. And so we really thought there was a place for our zero proof line. And we kept the model. You can use it for spacing, chasing, or replacing. So we built it to be Swiss Army knife as far as how it can be used. And we found a lot of success with that methodology and that kind of positioning. We just rolled that out last year. That'll continue to be a focus for us as we evolve. It's definitely here to stay. And how that evolves, as I talked about earlier, I think it will evolve. I think that drinker will evolve. I think the cycle we're in Bev Alc, I think we're coming out of a cycle and into a new one. So I do think some of the perceptions around alcohol and drinking, I think I think with my view, at least, is like last year we hit the bottom. I think 2026 is going to be climb out in some ways. I think the health optimization cycle that you can see everywhere is kind of a couple year course. People get the point. You know what I mean? Working out's good. Get your sleep. Like one of the biggest health things is connectivity and community and being social and being a part of a community. And I think as you go through these tangents and these things that are new, you kind of always revert back to, like that's a really important part of my life. And I think people, I mean, it's just ingrained in us to be social creatures and, social in nature. And I think you're done responsibly in the right ways. It's some of the most connective time you'll have with people. So I think these trends are changing, but I think, NA is definitely here to stay. So we want to play.
Yeah. Spacing, chasing, or replacing. I really like that. So as we wrap this up, I'm curious how you see the cider industry evolving in the next few years. You sort of said you think we're on the way up, but specifically in cider, what's going on?
Yeah. So I think a couple of things are going to happen. I think we're going to get a larger share at retail. I think you're already seeing that. As I said, I think historically been under indexed. So I think that's right sizing itself. I think we're going to continue to grow and take share from beer. I think I could see it landing somewhere in the 5-6 share of beer when it's all said and done. I also think you're going to see two things happen in cider from a consumer standpoint. I think the umbrella of cider is going to widen because I think two things are going to happen. Cider can be and is a very sophisticated drink. It can be drank like wine and champagne. So I think you're going to see an elevation of some of and you see this in more mature cider markets where it's drink a little bit more wine, a little bit more like a champagne. So I think you're going to see that limited mode and you're going to reach that kind of more premium consumer drinker. And then I think as supply chains are ramping up and being able to support the category, I think you're actually going to see cider at a lower price point. You're going to be able to get that value shopper, which we've never been able to, really speak to and talk to. They want our products, but we haven't been able to make it accessible. And I think you're going to see that as well. So I think, there's a lot of market dynamics, I think, at play from a consumer and then from a price standpoint. They're going to allow cider to continue to expand.
Awesome. What is one piece of advice you wish someone had given you at the start of your founder journey?
That's a really good question. There's a ton of things that I would look back on and say, I wish someone told me this. I think, and this is a little glib because I think it's said, but you really have to be on it for the journey. If you get into this and really think that, you're going to be, I never thought we'd be as successful as we are today, but I only now see that the job's not even halfway done. And I think my expectations when I started were just not really rooted in what as reality kind of showed itself. So I would say just be open-minded. And as any entrepreneur, you have to be in it for the journey to grow yourself. And you got to look at this as your gym, your entrepreneurial gym, where you're going to find out what you're good at, what you're not good at, where your weakness. But what this has done for me, it's been super humbling, right? Because as you grow, you continue to see opportunities for yourself to grow. You see, you start to surround yourself with, really, really competent CEOs and, beverage executives. And there's just always a new level to go. And you're never done. And I think the thing that any entrepreneur needs to know is you are never done. It's just the next chapter. You got to celebrate your successes on the run, but there's more to do. So there is no end. There is no end state, I think, is what I would say, because for my journey, when I started it, and I said I walked into it with no complex business plan, but if someone's doing it for some monetary exit or something like that, I think from a true entrepreneurial standpoint, now PE firms and private equity money can go and run plays to have a company and build it in 5 years and try to sell it. But if you're an entrepreneur, especially if you're bootstrapping, you'll be in it for the journey, for the evolution of yourself, your own growing journey, and have fun with that and let that be enough. Hopefully you can make a good salary, pay your people, and you can continue to grow your business. But that's really how you have staying power. And I feel more motivated today, a decade plus in than I did when I started. But it's because I really enjoy the work and the challenges that present it. And so you got to love what you do, and you got to look at this with a long lens, I guess.
Yeah, that's lovely. So we finish every interview with the same question. A drinks entrepreneur asks you for a book, movie, online class, industry group, person to follow online. What or who do you recommend to provide the greatest insight?
In the beverage space.
The person doesn't have to be in the beverage space, but if a drinks entrepreneur was asking you for this inspiration.
Great. Yeah. So, on X, I follow a novel. And if you follow him, I think he's a really thoughtful entrepreneur. It's obviously not in the drink space, but when you kind of look at kind of the mind, body, spirit of entrepreneurship, the way to kind of view, scaling a business, kind of a systems view, I think there's not a better person to kind of really look at how they view the world, how they view entrepreneurship, business, capital markets. It's almost like, some of the insight of, investor like Warren Buffett with kind of the Zen of the Buddha a little bit. And I think I've always found that to be a very good, like, middle way to kind of find between being an hyper aggressive executive and someone, because like, entrepreneurs are creators in the end. Like that is like that's kind of the energy from which you create and you do this work. And so there's definitely like an introspection and reflection part of this that I think is the most important, like for entrepreneurs. So to the degree that you can, find other entrepreneurs that have kind of found that, found that path. To me, that's the healthiest one because it makes every part of your life better. You don't want to get into this deal and lose your sanity and lose your soul and your happiness or your meaning, right? So if you can find like entrepreneurs who really found that balance through their own trials and tribulations, I'd say find that. It might not be novel. That was it for me, but there's plenty of them out there who have that balance. I'd say that's probably the best way to go and probably the best, long total life perspective you can get.
Totally. Well, thank you so much for coming and sharing your hard-won insights. We really appreciate your time.
Yeah, thanks for having me.
Thanks for joining us on Business of Drinks. Subscribe on YouTube at Business of Drinks Podcast, follow us on Spotify, or listen in on Apple or wherever you get your podcasts. Please tap the notification button so you'll be the first to know when a new episode drops.
And help us spread the word. Click those star ratings, give us a review, and share episodes or clips on your socials. It really helps us reach new listeners.
Finally, if there's something that you'd like us to cover on the podcast, tell us. We're at podcast@businessofdrinks.com or reach out via Instagram or LinkedIn.
We love hearing from you and we respond to each and every message. Thanks and see you next time.